Okay, we're recording. Hey, everybody, how you doing? It's your buddy Uncle Bruce here with Stock Markets with Bruce. Welcome to my channel today. Today's date, I'm in Osaka, Japan. That's the background I'm using today. I'm in Osaka, and it's Saturday, August the 16th here, 2025. In America, as I speak, it's actually Friday, August the 15th. Welcome all to the program. It's kind of a little recap for you what's going on in this market that we're into here. We did have an interesting day today for Friday that the Dow Jones index hit a new all-time record high. It barely broke the old record high, set a new one, but it couldn't hold it. The new high is 45,203. The old one was something like 45,073. So it broke it, and it closed at 44,946. So it's actually closing under 45,000. So it didn't have a new all-time high close, but it did touch new highs during the day. So fair enough. We'll see how that plays out going forward. The problem here and the reality here is that the markets are at record highs that have been now for several weeks. And the anticipation now for the markets to maybe go higher is lower interest rates. Wouldn't that be great? Well, okay, lower interest rates. The issue is, though, that lowering interest rates means the economy's in trouble and needs help. Is this economy in trouble? Does it need help? There's the quandary. By the way, the NASDAQ was down 87 points today. And the Qs were down 255. That's an interesting thing. They closed at 577.34. They got to 579.79, but that was not a new record high. The new record high for the Qs was 583.32. So we're now $6 below the high of the Qs, even though the Dow did touch a record high during the day today. Interesting little differences. SoFi was up 48 cents today to close at 23.77. GameStop was up 5 cents to close at 22.94. Rocket Lab was up 146 to 44.27. It sure moves dollars every day, doesn't it? Palantir was down 380. ASTS was down 42 cents at the end of the night. Microsoft lost 231. Apple down 119. Nvidia down 157. So we did have negatives on some of the big boys. Google did gain $1, but Tesla lost $5. Amazon gained 5 cents, so nothing to get excited about at Amazon. Meta up 310. Netflix up 889 or 839. Pardon me. IBM up 261 at 239. Have you noticed IBM? The IBM shares topped out just a little while ago at 296. The market's hitting record highs. The market's hitting record highs. And from 296, IBM's at 239. Do you see the run it had? Was it ridiculous? Wow, unbelievable. IBM has sure retraced some of those spectacular gains. HIMS was down 111. MSTR down 662. Earlier this week, we saw Bitcoin hit 123,000. Couldn't hold it. AI down 11. Supermicro down 12 cents. What else is going on here? Uber up 120 on the close. Adobe up 627. AMD down 344. Unity down 41. There you go. There's a couple of stocks. The news that I've been following just in the last day or two, these inflation indicators that are coming out. We had the so-called consumer price index come out earlier this week. And there's a lot of optimism that, well, if inflation is under control, that gives the Fed the green light to lower interest rates. And of course, what's his name? Is it Bassinet? He's the head of the head of Treasury. He's trying to get interest rates to go down. He'd like to see them down 1.5, 1 3/4 percentage points from where we are. But here's a problem with that calculation, unfortunately, for the Federal Reserve and for interest rate doves that want lower rates. Here's the problem. In the United States, on Friday, we had the release of what's called the wholesale inflation index. That is the index of inflation at the wholesale level when goods come into America or leave the factory floor for final delivery to clients. It went up when the street wasn't expecting it. It went up 0.9 of a percentage point. That's almost a full percentage point. It's now at 3.3% versus 2.4%. This is a problem, Houston. Houston, we have a problem. When the wholesale price index for inflation rises, it gets passed on to consumers at the retail level. Now, understand something, just so I clarify things. Goods come in from around the world into the United States and from factories all over the US. They come out of factory floors and they get sent to distribution centers, which ultimately will then release these goods to retailers, who will then distribute those goods to their retail locations, if they have multiple locations, obviously. And at the retail floor, the manager at the retail store, who either is told by head office or will make the call on the spot, depending how big the organization is, what should the price of this product be on my retail shelf? Retailers have a simple formula. Basically, they bring stuff in at certain amounts of money, they mark it up to another level, and the difference is the profit the store makes on everything they sell, less their rent, cost of labor, cost of insurance, taxes, you name it. When you have the wholesale level going up 3.3% on an annual basis, and it wasn't supposed to move from 2.4, this is an issue that the Wall Street analysts are going, whoa, wait a minute. We weren't there. There was no indication that this was happening. To me, I look at it and go, what are you talking about? There was no indication. We've got tariffs at 35% on Canadian goods. We have 30% tariffs on everybody else around the world. We have, the United States has got tariffs up its wazoo right now. And these are making their way through the system. Day by day, by day, by day, these make their way through the system until they reach the retail level. And so at the wholesale level, duh, is what I say. How can you miss that it didn't go up? And it's going to go higher, because this is nothing yet. We're still talking about major importers who made moves 6 months ago, early on in this whole tariff thingy, when there were delays and delays by Taco Boy, to get goods in under the wire, under the deadline, before the new tariffs kick in. And so most American consumers have been spared the pain of massive tariff price increases so far, but that isn't going to last much longer, and that is unfortunately the reality. Cost of services, here's another one. This is deadly. Cost of services went up 1.1% last month. That's another bad news indicator. Cost of services can be anything. Can be delivery fees, can be rents, can be lawyer fees, can be accounting fees, could be county and city taxes going up. You name it. Every angle that business is attacked by with regard to costs, and it's just the cost of being in business, is going up. And this services number, 1.1%, that's worse than the wholesale price increase. So a store manager, again, at a retail level, is looking out there going, wait a minute, folks, I'm bringing in $1 million worth of stuff for the fall and towards Christmas. Maybe I'm bringing in $2 million worth of inventory for my store. I've got to generate a return of a certain amount of money per 30 days to pay my bills, and on an annual basis to make it work. And it comes out of my merchandise. There's a markup that has to happen here. Prices are going up. Raw material prices rose 1.8%. Well, there's no question about this one. There are people, some of whom we know personally on this channel, who import goods or have been importing goods from around the world to make product in America for Americans to buy. And there are stories, horror stories, of small businesses out there who are ordering $200,000 worth of inventory and finding out that there's a $150,000 customs duty on top of the order waiting for them to be paid to get their merchandise. They can't afford it, so they don't buy it. They just send it back. I'm not paying the duty. I'll refuse delivery. and the items go back to where they came from and they don't buy. Well, if you don't buy raw materials, you don't make merchandise. You have nothing to sell. There's an issue here. 1.8% rise, that is the tip of the iceberg. Anyway, that's the inflation problem that's happening, and this is going to continue to eat away at corporate earnings and private businesses' earnings, mom and pop operators as well, from A to Z, and it goes down the line. It isn't simply just factories are having problems or distribution centers or retail stores. It's coming all the way down the line, and at the end of the day, a typical worker in the United States is not going to get a 5 to 8% pay increase this year to cover these expensive upcharges that they're being faced with. They're going to have to cut back on their spending. And if they do cut back on their spending because they don't have the money to spend it, that means the economy slows down a little bit here, a little bit there. So death by 1,000 cuts is what we're talking about here. And it's economy-wide. Just saying. Now, while I'm talking about all of that, to close, and I'm not near closing, Warren Buffett with Berkshire Hathaway made an investment in the last 45 days that he had to disclose. When you run a $100 million fund or larger, you have to disclose to the SEC your purchases and your sales. You have 45 days to do so after the event. Warren Buffett released, or at least Berkshire Hathaway released a report that they invested $4.2 billion into different stocks. And let me tell you who they're buying. I'm not going to tell you who they're selling. You've heard about these, but I'll tell you who they're buying. Their number one buy is a stock that has absolutely been hammered by the market, a company that is being investigated by the Justice Department for crimes, whose CEO was assassinated on a New York sidewalk earlier this year. United Healthcare, a company in real trouble. Well, not really in real trouble. A company that's got issues, but they're not in real trouble. Yeah, their stock is 30 to 50% below fair value. That's why Warren Buffett is buying it. By the way, they bought Berkshire Hathaway $1.57 billion worth of United Healthcare in the last 6 weeks. They have been loading up on United Healthcare. Why would he do that? Well, United Healthcare notices something, and you should know this as well. Every day that goes by in the United States of America, 10,000 people turn 65. Every day, 7 days a week, 365 days a year, 10,000 people turn 65. And they now find themselves in the Medicare world because of their age. They're automatically entered in Medicare. Medicare, United Healthcare owns 29% of the Medicare business. They got the doctors, they've got the pharmacies, they have all the billing systems. They own 29% of that market. They have 53 million patients now, United Healthcare. 53 million patients, and they're growing every day. Yes, patients die of old age. Yes, patients die of illness. Yes, patients pass away. But every day, 10,000 more turn 65. That's a segment they're moving into. They're into, and of course, United Healthcare is enjoying wonderful profits through corporate health plans across the United States. It's a machine. And so, what's the Warren Buffett strategy? We'll buy it now when nobody wants it, 50% off, 30% off, hold it for 10, 15 years. And what do we care if it takes a year for the stock to go back to where it was a year ago? What do we care? We're into it for 15 years. Healthcare, who's shutting this valve off? Nobody. Another company moved into is called Lennar, symbol LEN. Lennar is a housing creator. They build houses. There's a 4 million house shortage in the United States. $1.23 billion of money went into Lennar by Berkshire. They're buying into the housing shortage with Lennar. They're going in. Nucor, U.S. steel producer, $860 million investment. D.R. Horton, starter homes, $240 million. Lamar Advertising. You ever heard of Lamar Advertising? You've seen the name Lamar. You've seen it all over the United States. You just don't realize that you are seeing that name all the time. Whenever you look at a billboard, Look at the bottom of the billboard. You're probably going to see the name Lamar. That is the billboard outfit of America. $160 million investment into Lamar. Who would have thought? And Allegion, Allegion, Allegion. How do you pronounce that? Allegion. $110 million. Security company. That works out to $4.2 billion invested by Warren Buffett into stocks in the last 6 weeks or so. Interesting little area to go into. Those of you who are writing options, congratulations. Keep up the good work. Keep working your cash secured put writing strategies. Offer to buy stocks at discounts to what they're trading at. Take the money and earn daily interest. Well done, everyone. Call credit spreads. I say call credit spreads on the Magnificent Sevens. I say call credit spreads on the Qs, on the SPYs. But you got to be ahead of this market. Stay ahead. Go out several days. Go out a week or two, and get way ahead of this market. We are at record highs. We are hitting record highs, but we just barely break them, and then we back off a bit. We barely break. And I say if you've got a 1 week call credit spread on triple Qs and you're $5, $8, $10 ahead of the market, I think you're going to make money because the market cannot rise fast enough to catch you, I believe, in the long run. And eventually, what will happen with this market is there will be a pause. It will be a pause due to inflation concerns, the possibility that interest reductions may not be a lock, that interest rate reductions might only be a half a point or a quarter of a point, not 1.5 percentage points. Disappointments might be coming down the road. Anyway, that's something for you to think about and consider. If you're serious about making money as an option writer, then you will seriously get your butt over here. You will go to stockmarketswithbruce.ca, which is my website. You will find my beautiful face, or is it really that pretty? I don't know about that. You'll find my homepage. Here it is. Here's my mug right there. There I am. You can head over there and grab yourself some lessons and learn how to write options and become an option writer and learn the art of taking money from the gamblers, becoming a casino and grabbing cash. Start with lessons 1 and 2. Here they are. Simple as that. Right there. There they are. That's your secret right there. The first 2 of 19. Await your visitation. And the moment that you're serious about becoming a winner in this market, you're going to go into option writing and become an option writer. I'm more than happy to help you along the way. You know how to reach me. Email is down below. You want to do a one-on-one consultation someday, you let me know. Love to talk to you. Thank you, everybody, for joining me today. Have a great weekend coming up in America and around the world. I'm in Osaka here for a few days. Just got here yesterday. I have to discover this place. It's huge. I thank you all for joining me. All the best to you. And we'll talk to you next time here. Stock Markets with Bruce. Thanks for the thumbs ups, everybody. Bye for now.